Welcome to this preview of the CFE2 cash flow trading signals service. That means this service is designed for the purpose of looking to achieve cash flow. Actually, the system was designed behind the CFE2 signal service for this specific purpose. This is a cash flow with the emphasis on flow type of system. That means we have pretty frequent trades and we don't stay in them too long. We aim to take out the meat of a price swing, which is interesting. We found a way to identify where to get in and out within the meat of a price swing. So we have this method and we put out the trading signals. We put the signals in the members office. We send out a general email so you can go log in and get this signal. So what is this method? Well, we're going to use this method which stays in a trade for 2 days. Okay, just 2 days. That's why we have the 2 in the logo here of CFE. CFE stands for Cash Flow Enforcer. Okay, it's part of a bigger plan. Right now, we're focused on trying to create multiple streams of cash flow. So we are designing these systems and we are putting them into the trading signal services for those types of systems that fit the best and the easiest for signals, easiest to be put out there as a signal and easiest for you to trade. All right, so this is another system. It's very solid. Its approach is very solid, which is very important to the concept of targeting long-term cash flow generation. All right, so now I'm talking about cash flow and what this service is. I just want to say for disclaimer languages, we're not allowed to promise you future returns, so we're not doing so. You can see the disclaimers below. All right, so but for perspective, we have to focus on what we want. Okay, we have to go for the goal. We have to have our mind focused on the actual goal of accomplishing cash flow generation. What types of methods could we do on a repeated basis to generate cash flow? So that's our approach. So, keep that in perspective. So we have developed this signal service to be one that's easy to trade. You can use it with options. You can use it with stocks. Okay, stocks is super easy. You don't have to worry about which strike to pick, or you don't have to worry about premium decay and so on and so forth. Now with options though, you do have a little bit more excitement. You can put up less capital and you can just simply enter the trade and then get out 2 days later. You take 2 days of premium decay, which depends on the option you buy, depends on how much time there is to expiration. Your premium decay amount shouldn't be too bad. Well, I mean, the worst type of option is to buy an out-of-the-money option with, a couple days left, because you're going to get the worst premium decay. But you know what? If let's say you're using this signal service in combination with some other optimizations that you have figured out. Well, let's just say, we have a signal that coordinates with this optimization method or a series of methods. So today is going to probably be a bigger day, or maybe you have some other factors, some events. Maybe you have some bigger picture price action scenarios on the price chart. And you say, hey, you know what, this is a good day to kind of try to get a bigger reward per risk. And then, if you have all these factors determined out, then yeah, some of these days can move, pretty good. And so you can put on an out of the money or an at the money, very short-term position and do really well, for a percentage. But for most of the time, you have to deal with that premium decay, which is just annoying, right? So you can go shorter term in the money, or you can just go out more in time, and you're going to get less of a delta, right? But if you go out let's say even 30 days, the premium is much slower. But let's say you go out 2 months, even the premium decay gets very slow, and so you can pretty much negate out most of the premium decay effect. The other issue is the bid and ask spreads on the options. We have to, and then you have to mind, which stock you want to play in terms of how are those options. What's the bid ask? What's the difference between the bid ask? Some of these stocks have some very big bid ask, but some of the more active stocks with active options, such as Apple, usually has very tiny bid ask spread difference, and that's great. But you can have a tiny bid ask difference, but if your stock isn't going to move on average very far, well, it's not going to do that well, right? So if your stock can move a ton all over the place on average, and the bid ask spread is a little bigger, well, it may be definitely worth considering just paying up for the bid ask spread. Now this type of, we call this type of out in a certain number of days trading, we call this approach pops trading. Okay, pops. That's what we call it. So I don't think a lot of people like that name, but so we'll just keep that to ourselves for now. Pops. So you're in, and then you can just get out for 1, 2, whatever day pop. And this system has a 2-day pop and has pretty good accuracy. Let's just go look at some performance. Okay, here's a picture of some performance. All right, here's some on Netflix. Now, again, stocks can be moving around well, and then they can start going a little slow and dormant. And with options, we need to make sure that the options are reduced in price to match the slower price action of that instrument. Otherwise, you got things upside down. It's just not going to work out. So what we're looking to do is we're going to try to focus in on a key 1 or 2 bread and butter stocks. But you know what? We're going to look over time. If something is just kind of slowing down and we can play a better, more solid asset, we may switch the stocks up. On the other hand, there is value of sticking to one stock and then just doing all the trades in a row very systematically, and because stocks can go into a more dormant, sleepy period, slow period, then they can wake back up and start getting back into a more dramatic period. It's just that when you're trading stocks, not a problem, right? Doesn't even matter. When you're trading options, though, could be a problem. So we're going to look to maybe switch that up. Now, there is, like I started to say, there is a definite benefit of sticking to one stock and just keep with it and just keep running the trades on the system right in a row. And that has its power. And I think that we're going to probably spin off some one stock memberships as true cash flow generation centers. Here, when you have multiple stocks, it gets a little confusing. So we'll see. Whatever we put up there is what we put up there, but and we may improve it over time as we get more data from our subscribers to how they're doing. But you can see here, these are just 2-day trades. Look at this. Okay, you can see the net profit for each trade. Roughly. Usually we skew and round it down. Okay, to allow for some slippage and things like that. So, but this is a good picture. So it's a consistency. Okay, it's a consistency of the net profit according to the CFE2 system. So you can see here the net of each, but then you can start to see how these stack up. Okay, so we just simply added the last trade to the new trade, and you have the running totals. See how it's just growing like that, all right? Then you can see a chart representation. Yeah, we got a little fancy with the chart function. So that's a pretty sweet looking uh, progression, right? Okay, so and the only time it started going backwards a little was just over here. Okay, then what happened? Started going right back up. So that's shows how important it is to have a consistency of approach. And you can see here we're here on Boeing, okay, BA. You can see the progression here. The first trade didn't win, right? Then you can see the progression out of that hole just keeps on growing, 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 growing. All right. And then so what's the October 21st to May? So that's not even a year. You can see the profit points. All right. Here's the chart representing Boeing. All right. Pretty sweet looking. All right. Here's Caterpillar. And this one started back in 2021. And you can see the progression here. It just is a steady marcher, right? Steady marcher. So with stocks, I mean, it's just great. You don't have to trade options. You can, if you don't have a lot of money, you can just start with a few shares. Just check your commissions. But start with a few shares, couple hundred shares, whatever. Just start building, right? And then you can see this chart of Caterpillar. Now that's pretty cool looking, right? Just keeps on going, right? Keeps on going up. All right, so that's a picture of performance, and we'll look to update this page from time to time. We're not going to, I will see what happens about the. We're looking at getting some software made to automate all that track record keeping there and posting. But anyways, in the meantime, this is what we're doing. It's really simple. We just put in the signal onto a page, and then we just send out an email, and you're alerted to when a new signal is on a page. So you have a centralized location to access to signals, and that's it. It's really simple. Okay, so if you have any questions, let us know. Otherwise, just get started and start watching these signals go by, and build your confidence in them. You can paper trade them, and if you have a demo, you can trade on that, and then otherwise just watch and follow. Build your confidence, because if you don't, then you may not look to employ these signals. But let's just say this works out, though. Let's just say you're able to add on another powerful cash flow type of systems, cash flow center. Let's just say what if you're able to just get this type of growth curve? I mean, that's just absolutely fantastic, right? Yeah. So, so just get started and start watching, right? And then, some of you are more gung-ho, may just start right away, but just start building your confidence in it. And it could be a massively valuable thing. You don't want to miss this. You don't want to forget about it, in another hour because you got distracted by something else. So what I do is just lock yourself in, okay, as in signing up. Now, I know locking yourself in sounds scary. You can cancel at any time by yourself. You don't need to even email in. So you have control of your membership, all right? Everyone likes that. So, just get started, and you can lock in your lower rate, though, as we, over time, will have to raise the rates. And I can't say what special there is on a presentation video, but just scroll below and come to this webpage on besttradingsignals.net if you don't see a link below. But if you're not on besttradingsignals.net, then just there should be a link below video, like let's say you're on YouTube or something. All right, so I have to close out this video, but that's it with the overview. Come check out more information with the CFE2 Trading Signals service. Thank you.